Thank you, Carl and Sarah. Welcome to the Halftime Report. I am Courtney Reagan, and today for Scott Wapner, front and center this hour. The state of the record rally as we head into a critical Fed meeting. Our investment committee is standing by with the playbooks. Joining me for the hour, Josh Brown, Stephanie Link, and Jim Lebenthal. Let's get you a check on the market here today. We are slightly to the downside across the board. Dow Jones Industrial Average down by about 0.3%. S&P 500 hanging tough, down about 0.2%. And then the NASDAQ is down just marginally here as we're about the midpoint of the day. But we have this very important Fed meeting. We all think we know what's going to happen. Jim, you and I were just talking before the show about the backdrop, about where we're sitting. Sort of frame it up for us. I think we all know what we think is going to happen from the meeting.
Well, we have a Fed chair and a Fed open market committee that doesn't like surprises. So I think the 25 basis points is probably baked in at this point in time. It would be a very big surprise, which they don't like to do more than that, to do 50 or to not cut at all. So let's just assume the 25 basis points is in there. I don't really know what the verbiage is going to be. I doubt this is going to be a hawkish cut where they start talking about, how they may have to maintain a restrictive stance for quite some time. That would be surprising as well. But I think what's more germane to your question, Courtney, is that we've had a market that just inexorably marches higher. I took a look today, and since late April, when we got past the post-Liberation Day blues, there's been exactly 3 days in which the S&P 500 has closed down more than 1%. Now, that's not unheard of. That's not the great moderation, but it has been a very tranquil environment recently, and that, to me, says that a lot of this rate cut tomorrow is probably priced in. I wouldn't be surprised if we give something up in the wake of it. But that is not something that you should take from my lips and say, oh, I'm going to go sell stocks, I'm going to go sell the markets. That's not the point. There are too many positive things going on in the markets right now. I mean, take your pick, and I don't want to steal from either Stephanie or Josh. I'll leave some on the table for you. But, obviously we've got... I know. We could do this. All three of us could do it together. We've got a growing economy. Sure, we've got some worries about the labor market, but we still got low unemployment, deregulation, growing profit growth. I'll stop there. The setup is very positive, even if you get a pullback on the news tomorrow.
Why are we then sort of marching just slightly lower here, Stephanie? If we think we know what's going to happen, what's guiding us today?
We're up 32% from the April 8th lows, right? So we've had a lot of good news. We are slowly ticking off the boxes of the unknowns with tariffs, and we'll get Fed and inflation and geopolitical issues.
Lisa Cook is going to be there, it looks like. Can't fire her before the meeting.
Which is interesting in and of itself. So we're ticking off the boxes. We have been since April, and as a result, we are grinding hard. We have grinded higher. And then I would say a lot of it is because, yes, the economy is strong, stronger than probably even we thought starting the year. At
you know where Atlanta Fed is. You looked, right?
I know.
3.4.
Yeah, about 2.5–3% growth, which means and has translated into much better earnings. And that's really what the equity markets really care about, is the direction of earnings. And earnings have been revised higher, and I think they're going to go higher even from here. The consumer is the most important part of the economy. It's 70%.
I agree with that.
I know you do. That's why I started with that. But they have jobs. They have wage growth at 5%. Inflation is coming down. You have a manufacturing renaissance happening. Anything tied to data center, we've been talking about it for 3 years. The labor market is cooling. It's not collapsing in my mind. So the Fed can ease. They probably should ease, but it's from a position of strength in the economy in my mind. So I think if we sell the news, I'm buying. I think the fourth quarter, I think you got to get through September. It's kind of volatile. I think fourth quarter is going to be quite strong. I think earnings are going to continue to lead the charge. And I think the broadening out in the market is very refreshing. I still like tech, but there's a lot of other places that are doing well. Financials, industrials. I like consumer because that sector's lagged, and I think that's going to play catch up.
Yeah, absolutely. And I want to dig more into that. And Josh, we got to get you in. We know that you're here. I mean, the August retail sales coming in much better than expected. It does seem like the wealthiest of Americans are really sort of pulling along the economy. Maybe I'm too much of a worrywart, but every time these numbers keep coming in stronger and stronger, I'm surprised.
Okay. Well, I was surprised to hear James Xavier.
Josh, I don't think we can hear you. We're going to work on that. I'm going to go back to Stephanie for just a second while we work on that, because I want to pick up on this thread about the retail sales and then the Bank of America consumer spending, also another month of healthy spending growth. So if the consumer is an area that you think is going to continue to take off and they're lagging now, where should we be looking?
Well, the ones that I own actually haven't done well this year, but I do think you're going to see a catch-up.
Maybe they will, yeah.
I think so. Look, back to school we know was very strong. You just mentioned credit card data. I looked at the Chase data, and we actually saw an acceleration in August from July in terms of spend. American Express said that July and August accelerated from June.
Yep.
So we're hearing from companies, we're hearing from the banks. Every bank last week at Barclays said how good the consumer was. So back to school was good. You know that's a good precursor to holiday sales. And I think I own Deckers, for example. Now, I'm kind of flat in the trade. It's down 43%. That's why I bought it, because it's down 43% on the year. But they've got some of the greatest brands in terms of Hoka, in terms of UGG, and double-digit earnings growth and gross margin expansion, operating margin expansion. Yes, it was very expensive, priced to perfection. Now I don't think it is. I like the Gap. If we have a denim cycle, which my daughter, my 18-year-old says we've had a denim cycle for a while and we're going to continue, they're number 2 at Gap and they're number 3 at Old Navy, and they've been taking market share. Target is a little harder. It's a turnaround story, but it's trading at 11 times earnings with a 5% dividend yield and a new CEO who knows the company very well. He's a lifer there, and that was disappointing because we wanted someone from the outside, but I like having someone inside making some of the changes there. So, and then of course Chipotle, which announced their increase in their buyback last night, and the stock is trading, at 29 times forward. Its historical average is 46 times.
Got it. There's a lot of good reads on the consumer. We're going to just take a beat here because we want to get to some breaking news from Washington. Emily Wilkins is on Capitol Hill. What do you have for us, Emily?
Hey, Courtney. Well, as you know, a government shutdown is just days away at this point, but we do have news that the House Republicans are getting ready to release a stopgap measure. It would continue current government funding levels until November 21st, and it would also contain $30 million into a fund meant to help keep members of Congress safe as they go to public events and go around their district. Obviously, this comes in the aftermath of the killing of Charlie Kirk. A lot of concern up here on the Hill on that, but it does seem at this point like Republicans are going to be releasing this bill. They expect a vote potentially on Friday, and then it could go to the Senate, where senators could stay the weekend to try and get this done. Of course, this bill does not have any provisions on health care, which is what Democrats say that they need to be able to vote for it. So at this point, even though Republicans seem to be on board with an agreement, it's not clear this is actually going to be able to pass all the way through without more Democratic support. Courtney?
Thank you so much, Emily. I appreciate that. Good to hear some of those details. Josh, we're going to get back to you here. I think you're good now. We have a lot of positivity. 1, 2, 3. I got you. We get a lot of positivity on the desk, but Barclays may be more in my camp, talking about elevated euphoria, calling for potentially maybe more near-term caution. Where are you?
Look, I think we would all acknowledge there are areas of the stock market in which there is euphoria, but my counter to that is it's always that way after an extended bull run. You never have a bull market, Courtney, that doesn't have like these little sideshow things going on. And historically, those have not been reasons to just abandon your investments. Like, oh, this idiot is doing this crazy thing with leverage and blah, blah, blah. Therefore, I have decided I will no longer be investing for my retirement. Like, it's crazy logic. So I think we could acknowledge that there are pockets of euphoria, but I don't know, equal weight the Russell 3000, like all the stocks in the stock market, equal weight them and do an average of the PE ratio. We've had no PE ratio expansion across the entire market for the last 3 years, which means earnings have kept pace with the gains, again, on average, not for every stock. I think the bigger question, though, and Stephanie and Jim nailed it, so I don't need to spend a ton of time on it, are we going to have a recession or not? Because if we're in a rate-cutting cycle that's being driven by the fact that there's a recession or fears of a recession, it's a very different scenario than if we're just in a rate-cutting cycle that's accompanied by continued economic expansion. And I obviously think that the situation we're in right now indicates the latter, which is why I'm not, as concerned. And think about this. The S&P 500 has risen an average of 11% in the 12 months following every rate cut since 1970. So, it's not an extraordinary thing. We had a cut, then we had a 9-month pause. Now we're going to have another cut. if there's no recession materializing within the next 12 months, and right now there just isn't any sign of one, the S&P 500 should be higher as monetary policy is more accommodative. Now, why am I so confident that there's no sign of recession? Don't believe me. Just go by retail sales. Go by the consumer. Go by what the banks are telling us, to Stephanie's point. You can have gut feelings. You could have opinions. You could have anecdotes. My brother-in-law got laid off. My nephew graduated college, can't get a job. Yeah, it's not amazing for everybody. We acknowledge that. But think about this. The XRT, which is the retail ETF, is up 11% year-to-date in total return. Look at control group sales that we got this morning. That's the cut of retail sales that feeds directly into both PCE and GDP. That's up 0.4% month over month. Sales are now up 0.4% month over month over the last 3 months when adjusting for inflation. Spending is actually, bizarrely, re-accelerating. So when you understand what the data is saying and you understand the history of these types of benign rate cuts that aren't accompanied by recession fears, it's really hard to paint the picture that you want to be out of the market. So I just think if we think about it that way, from a data-driven standpoint, we get a little bit more confidence than if we just think about all the things that could go wrong that haven't yet gone wrong.
Yeah, I'm nodding because it is remarkable. The XRT, to your point, on track for its 5th straight positive month, which is the longest streak since August of 2020, which is pretty remarkable. And Jim, you were sort of smiling and nodding along with John.
Yeah, I mean, as usual, he kind of nails it. And maybe I'll just extend what he was saying a little bit to say, if you are bearish, what are you hanging your hat on? Are you hanging your hat on last week's jobless claims? That seems pretty tenuous to me. Yes, they spiked, but they've spiked quite often over the last 3 years. Unemployment is 4.3%. Are we going to say that housing is stuck? Okay, housing is stuck, but you know what? Mortgage rates are coming down. We're going to say that the ISM manufacturing is below 50? Yes, factually it is, and factually it has been for over 2 years. So, I think the danger, as I'm listening to myself, is there's a certain breathlessness with which I'm saying all this. It's just really hard to paint the bearish picture here in which we're going into recession. So, all I did, and the reason I was nodding, as Josh was saying, was just add a little more detail about how hard it is to really, conjure up the bear case. Can an asteroid hit the Earth? Of course it can. And it doesn't even have to be an asteroid. You could get a geopolitical event that nobody's thinking of right now. That can always happen. But as Josh just said, don't get out of the market because you've got a gut feeling that something's going to happen. We
have a 2.5–3% GDP economy, and we haven't even had a housing cycle yet. And we haven't even had an auto cycle yet. And I went back to look at...
Or a denim cycle.
No, we have had a denim cycle, apparently.
I just gave in my skinny jeans. I'm just not quite ready to buy the wide legs yet.
The big baggy, no.
I can't do it. I look like a clown. Anyway.
But I went back and looked at the 30-year mortgage rate. In January 13th, it was at 7.41%. It is now at 6.43%. We need to get it under 6, for sure. Closer to 5, and I think you have a home run in housing. But my point being is that you're on your way, and if we do get lower mortgage rates, you will have a housing cycle, and we know there's a multiplier effect to housing. When you buy a home, you have to buy stuff in the home, you buy stuff outside the home, you buy a car to get from the home to wherever it is you have to go, and there is a high correlation between housing sales and auto sales. And I think the auto piece is very interesting because we don't really talk about auto. We haven't talked about autos in a really long time. I happen to just buy an auto parts company last week. But my point being is I think there's other drivers to the economy that if we get going, we can actually do. That's right. then we really can get going.
Well, I'd like to pick up again on your thread here about housing. I mean, the ITB down about 5% in a week.
Yeah.
So maybe we're not quite there for this reignition point because of rates or otherwise. But you also bought something else in the space.
Yeah, QXO.
And why?
Because
it used to be called Beacon.
Yeah.
Something. Why can I not remember? Beacon Building something.
Silver Solar Technologies.
Okay, but it's
they bought Beacon. They bought Beacon.
Oh, they bought Beacon, rather.
So it's led by an industry pioneer, Brad Jacobs.
Okay.
He was at United Rentals. He was at XPO. He's at Waste Management. He's a rock star. He has put $1 billion of his own money into this company, and this company is really just all about making acquisitions in the building products distribution industry.
Okay.
And so I think it's a hidden way of playing the construction, housing, just rebuild play. They have best-in-class EBITDA. They're growing 5 times as much as the industry. It's trading at a discount to the industry, and I just think they have the best technology. So they buy these, they make these acquisitions, and then they use technology to get more efficient, productive, and that sort of thing. Hence the profitability story. And so I think this is just a hidden way of playing the cycle in general.
Josh, you own Invitation Homes, Rocket Companies. You want to hang on to them if rates continue to fall in this environment?
Yeah, so to be clear, I don't view Invitation Homes as being a rates play per se. It's rental housing, and this is really about the distribution. It's a REIT and just reinvesting that distribution. But on Rocket, look, I've talked about the stock. I added it. I think my average cost is like 13. I have not sold any, despite the fact that it hit almost 22 the other day. I really think that this is one of the big turnaround stories that is sensitive to the rate cycle and to housing. While the housing market has been in this, I've called it an ice age, existing home sales depressed, lack of activity, realtors miserable, mortgage brokers miserable. I think we're coming out of that, and I think Rocket is one of the preeminent ways to benefit from increased activity in the housing market. Just like as a mental exercise, you picture the millions of people who become eligible for a refinance as rates drop from, they were north of 7, 30-year mortgage rate. If they get down to 6, if they get down to 5, it's millions and millions of opportunities for refis, for homes to turn over, and that's all playing into Rocket's wheelhouse. They have spent this ice age making acquisitions. They bought one of the largest portfolios of mortgage servicing, Mr. Cooper. They also acquired Redfin, which is the biggest driver of leads to realtors and to mortgage brokers. Like, they've been investing while this market's been in an ice age. And once it thaws out, I think the leverage and the benefits accrue to the shareholders in RKT.
You know, it's also interesting. I own D.R. Horton and Toll Brothers, some more pure play housing calls. These stocks are up 20, 30%.
Rocket's up 82% year to date.
Well, these two are up from when they reported third quarter.
Okay.
And the third quarters, they were horrible.
Yeah, they weren't.
They were horrible in terms of demand, right? In terms of deliveries. But gross margins were actually better than expected. So they're doing the best that they can. And I think, obviously, we know the market is a forward-looking indicator, and everyone's looking at lower interest rates, and maybe that's going to fuel these stocks. But there's so much more to go because these stocks are so incredibly cheap. 12 times earnings for D.R. Horton, 10 times earnings for Toll Brothers. Toll Brothers is the industry leader, trading at 10 times earnings. I mean, I just think that these are still buys.
Speaking of rate sensitive, I mean, we got to talk about the banks here. We got a call from Mike Mayo today. Wells Fargo Mike Mayo raising his price targets on the big banks. So he now has Bank of America at 60 from 56, Citigroup 125 from 115, JP Morgan at 345 from 325, Goldman 855 from 785, and Morgan Stanley to 165 from 145. All the names except for Morgan Stanley he ranks overweight. Morgan Stanley he's looking at equal weight. And Jim, I think you got to take a victory lap on them. Citigroup up 41% year to date. Look at that.
It's been overdue, Courtney. I'm very happy with the last year's worth of returns in Citigroup. I do think there's more to come. I mean, for quite some time, and Stephanie and Josh know this, for quite some time I was looking at the stock saying to everybody as I was on air that this was trading at a ridiculous discount to tangible book value. There was a time about a year and a half ago it was trading at 50% of tangible book value, to which I said, give me a break. Well, now it's trading at tangible book value, and maybe somebody should say, well, Jimmy, go ring the register. No, I see no reason why every other big money center bank should trade at a meaningful premium to tangible book value, and Citi is just a tangible book. So look, I think the 125 that Mike Mayo, and he's been a very big bull on it, his target equates to a 125% tangible book value premium, and I'm with him on that. Let's rediscuss whether I should get out of the stock when it gets to 125. By the way, if you measure it on earnings or dividend yield, I think that 125 is justified as well.
Josh, you're in JP Morgan. Jim, you're there too. JP Morgan hitting a record high today. What do you make of this stock as we look at rates going lower?
It looks like the target on JP Morgan just went to 345, and I can't say I disagree. One of the things about JP Morgan, since I've owned it over the last, I don't know, decade plus, it's always been, quote unquote, more expensive than the other banks. That's never been a problem for me because I think banking, the fundamental thing about the banking business is trust and confidence. And JP Morgan has never lost that trust and confidence. As a result, they haven't gotten caught up in a lot of the scandals and accounting issues and need to do these kind of like mass divestitures that other banks have had to do. I do like the sector broadly. I was talking to my friend Nick Colas yesterday from DataTrek. Nick pointed out uniquely among all of the sectors that have had good returns this year, the multiple for the S&P financials started January at 16 times. It's still at 16 times. This means, yes, the stocks went up a lot, but their earnings went up a lot as well. So you have the same opportunity, starting opportunity in the financial stocks today that you had 8 months, 9 months ago when the picture was nowhere near as cheerful as it is right now. And I think that's unique. I think that augurs for a really great finish to the year. And think about all the benefits, lower rates. You've got expanding margins in a lot of areas. You've got this whole fintech boom, the stablecoin component that's come along, a lot of growth, the asset management growth, everything is up on the year. And you've got the capital markets are back in action. So it's like so many different levers to be pulled, so many different ways to win. So yes, I still like JP Morgan, of course. And I'm also finding a lot of great stocks in the space that have made my best stocks in the market list. We now have 39 financials, I think, on our list of best stocks in the market. It's pretty unique.
And Steph, you don't own Citigroup or JP Morgan, but a bunch of other names here. I feel like all the rest. Capital One, Morgan Stanley, Bank of America, Wells Fargo.
Yeah.
Sit and stay as rates go lower? I mean, is there any sort of portfolio pruning you need to do here?
I will buy more Capital One. That's a fairly new position. I think the Discover financial transaction is transformational. Quite frankly, they get into the payments network business and they have size and scale, and I think you're going to see a re-rating there. I would hold on to the banks that I do own. Wells Fargo's buying back more stock than they said they were going to. Morgan Stanley sounded giddy last week at the Barclays conference about M&A. We've seen completed M&A transactions year to date up 40%, in North America up 103%. So M&A is just starting to really click. But of course, you have the steep yield curve. These companies are talking about better NII, net interest income, net interest margins, fee growth from capital markets. So yes, they've had a nice run, but to Josh's point, I still think they're very attractive at something like 14 times for the ones I own, at least. And the market's at 22 times, so it's still at a discount.
Interestingly, I was talking to an unnamed executive source fairly high up who was talking about the Capital One cafes and actually how they are fairly attractive to consumers, and it's turned into a good marketing tool, which I thought was quite interesting.
Whatever it takes, Courtney. Right? I will take whatever they want to do.
A Capital One cafe.
There you go. I mean, sounds kind of catchy.
If they serve a pumpkin spice latte, I'm in.
Citigroup, are you listening? Citigroup Cafe, I'll get behind it.
Jim, I'd love to just real quick before we go here talk about tech, because I think you deserve another victory lap. Look at your shares of Alphabet, right?
Josh, Steph, is this the usual thing where I get a lot of pats on the back?
43.5%.
I like hanging with Courtney.
Dude, Scott is watching this show right now and leaping out of his chair. You are so dead next week.
Well,
enjoy it.
That's awesome.
Yeah. Well, look, Alphabet. I was surprised in May when the stock was down around 160 and people were literally talking about an existential threat. And I didn't see it that way. I think if you go down to simple principles of investing, The bigger you are in any industry, the more safety you have. You have more resources, whether it's capital markets to finance, whether it's attracting talent to build new products, to respond to competitive threats, whether it's a customer base that you can fall back on. Look, Alphabet had all of these things, and that's why I was surprised by the rhetoric I was hearing in May, and I just felt like, all right, it's the behemoth, it's Google, I'm going to stay with it. It's been vindicated both in the judicial realm, where they've had obviously this penalty that wasn't as draconian as predicted. But right now, I think it just goes with the markets. We have to wait until earnings come out and see if those competitive threats are now starting to have an effect. But for right now, it just goes with the market. I'm sticking with it.
Joe Terranova yesterday was saying sort of those judicial rulings really was an unlock for this stock.
It cleared the runway. Cleared the runway.
Yeah, we had to go there before we wrapped up. I couldn't believe we made it through that whole block without talking about tech and lower rates. But it felt like you deserved a victory lap. When I saw the stats, I thought 43%, 5%. That was a good one. Well, coming up, more committee moves. Stephanie Link is ready. She's got another new buy. You're going to want to stay tuned for that. And welcome back. Stephanie has another move. Steph, you bought Aptiv. This is not one I know much about. Tell me why you like it.
It's an auto parts company, but it's spinning out its software business. And we have a catalyst November. They're having an analyst day, and we're going to learn more about the information about the spin. You know I like spins. Spins work. GE's up 422% since Larry Culp actually took the realm as CEO at GE and split up everything.
Wow.
Spins work. 3M, one of the better names in industrials last year, because they spun out their businesses too. So I think this is an interesting story, because I think the auto parts piece, as we talked about, is in a trough at this moment in time, and I think could do better. And they obviously have a lot of auto exposure, but they're going to diversify into other end markets. They're growing mid-single digits, and margins are in expansion mode. And then the software piece, the total addressable market is like 90 billion. They're growing mid-single digits, and I think when they get away from the parent, they'll be able to focus more on growth and see an acceleration in revenue. So it's a spin story, and that's the catalyst, and that's the reason. In addition to maybe auto parts are just kind of lagging, and maybe we're in for a recovery.
That is interesting, and obviously with tariffs on autos, I've thought too that auto parts are an interesting place for us to study, see what happens if we fix up the cars instead of buying brand new ones.
Well, and this stock is trading at 8.7 times EBITDA. I mean, it's awfully cheap. It's lagged. The whole sector has been, terrible.
Sure.
So, but this is best in class. And by the way, Tesla is one of its biggest clients.
Oh, that's key. That's critical. Well, let's get to some calls of the day. Rothschild's downgrading Live Nation to neutral. Josh, you own it.
Yeah, look, the stock is up a lot, and I know sometimes on the sell side, they'll do these types of downgrades or upgrades out of nowhere just to generate some activity on a trading desk or whatever, or have something to say. But in this case, I think I understand what their point is. Like, we still have this lawsuit overhanging the company. We still don't know what the resolution has been, and the company has already, the share price has already gotten a lot of credit for how great the business is. And the business truly is great. Stock is 3% below 52-week highs. It's up 31% year to date, 74% over the last 12 months. Look at their last earnings report. Through July, they sold 130 million concert tickets for the year, which is up over last year, which was another record year. Double-digit attendance increases internationally. They said over 40% of global stadium shows sold out 95% of their tickets within the first week of being listed. Spending at venues is up, concession spending is up, all double digits, and there are absolutely no signs of weakening consumer demand that the company can see. So, look, I understand the downgrade. I just don't think as an investor that's really the thing that you want to have as a focal point. The reality is, ultimately, it'll get settled or figured out. It'll be a dollar amount, and life will go on. People will still want to go out and see live music the next day. This is literally the best pure play for one of the hottest secular growth trends in the world, and I just don't want to let it go. So I remain long. I think the stock trades higher.
Experience matters. Look at that, up 67%, down just marginally on that downgrade today. Jim, I want to lob you one. Adobe added to UBS's 30 for 30 list. You own this one. They favor it for the industry-leading position, ramp up of AI-related offerings.
This has been a very difficult stock, Adobe, and I'm sticking with it for now, Courtney. But I'm not pounding the table on this like I was on Google over the past few months. It may very well be bottoming here. I mean, we see a ridiculously low valuation, mid-teens for a software company. Estimates are now starting to peak up a little bit, and you're getting analyst coverage like this. So I'm sticking with it. But as new money comes into client accounts, I'm not rushing out to buy Adobe. There's still a lot to be proven by the company, particularly with regards to competition. I know I was just saying that with Google. You know, Adobe is a $147 billion market cap. Google is a $3 trillion market cap. So bear in mind that difference. I'm hanging on to it, but I'm nervous.
Okay. Well, speaking of healthcare, J&J is on your radar today for the best stocks in the market. Josh?
Yes, I almost said with Jardiance, it's easy to say I'm lowering my A1C, but I didn't want to get CNBC in trouble. I don't know if they're a sponsor. All right, J&J. Okay, this is a great setup for me to explain a really important concept that transcends the J&J story. What's happening with the stock, and we're showing you a very long-term chart here, is what the technicians refer to as building a base. The general idea is that if and when a stock breaks out from a typical range that it's been stuck in this case, like 5 years, the move could be extraordinary if it had been trapped in that range for a really long time. So there's an old adage on Wall Street, the bigger the base, the higher in space. So this is a big base. And J&J, the company, is in the midst of a massive transition that's been underway for years under a relatively new CEO. And they have a couple of key goals, and they are executing on those goals. They wanted to become a pure-play healthcare company, so they spun off Kenvue, which was very well received on Wall Street. I know Stephanie's made a lot of money in that stock. And they are fully focused on innovative medicines, which is oncology, immunology, neuroscience, and medtech, so surgical robots, cardiovascular devices, orthopedics. And that's what the business now is. I think taking a step back from gigantic M&A and the types of deals that distract management and really just doing fill-in deals where it makes sense. Like, this strategy is now being rewarded on Wall Street with the stock price working. In July, they issued guidance for the rest of the year and had a lot of great news to share, a lot of milestones. The next earnings report is not until October 14th. I think the stock bides its time just under those old highs until we get that October 14th report, and that could be the big catalyst. Healthcare has been terrible this year. I'll just end by saying the sector is up only 1.3% year to date, trailing everything. But there are some really big winners in the sector. We've talked about a bunch of them in my best stock segment. J&J has been sideways since the end of 2022. But not only is the stock price on the verge of a multi-year breakout, the fundamentals are as well. They just raised full-year earnings per share guidance to $10.85 a share. That would be 8.7% growth for this year versus last year. And so when you have a technical setup like this with improving fundamentals and a stock that's really been forgotten about for a long time, I love these setups. I'm not long the name yet, but that could change. This is exactly the type of situation that historically I've done okay with. So that's the J&J story today.
Jim, what do you make of either this trade or your own healthcare ownership with AbbVie, AstraZeneca, Vertex Pharma, and any reaction to the FDA letters that Angelica brought us? Well,
look, FDA letters come out all the time. I mean, this is a highly regulated industry, so I don't really look at that and get scared or enthused one way or the other. But I think, the point that Josh was making about healthcare has been a terrible sector is absolutely true, and it's been driven by two names in particular that are the biggest names in the space, right? United Healthcare and Eli Lilly. I do think, and Josh is making this point, that you could pick your stocks. So AbbVie is one that I've owned that's had a very good year. AstraZeneca is another one that I own that's had a very good year. Vertex I've owned, and it's been flat this year. I think, though, it has a very good long-term potential. My point being is that pick your subsectors within the industry. Obviously, as you can tell from those names, I like pharma and biopharma. That's where I'm staying. I think managed healthcare is a little tricky still with government reimbursements being questioned, but pick your spots and pick your stocks.
All right, welcome back to halftime. Well, several stocks have gone virtually nowhere this year, despite the S&P 500 at record highs. Names like Delta, Lockheed Martin, Nike, and others all down around 3%. Jim, we gave you credit earlier in the show for some good moves. And Citigroup and Alphabet can't be all winners. Delta, kind of a dud.
I'll go out on a limb here, Courtney, and say perhaps sometime in the future we'll be singing the praises of Delta. When we talk about dead money, you have to ask yourself, is it something like what I was talking about with Adobe, where it was dead money a year ago and I should have sold it? Or is it what I'm going to tell you about Delta right now, where I see a lot of opportunity? I mean, remember, this stock was up at $69 back in January before Liberation Day, Doge, all that sort of stuff, put the kibosh on a lot of travel expectations. But what we're seeing right now, I track TSA passenger throughput every day. It's well above last year, which was a pretty good year to begin with. You've got a company like Delta that is monetizing the front of the cabin probably better than any other airline out there. You've got fairly benign fuel prices, and they refine their own fuel to begin with. A very, very healthy balance sheet that's getting even more healthy as they produced a ton of free cash flow. So at roughly 9 times forward earnings, I see a lot of opportunity here. The only thing that would make me scared is if I saw a recession. We covered that earlier in the show. Nobody's really seeing a recession in the offing, especially me.
TD Cowen also reiterating Delta a buy, so maybe you're not alone at looking at opportunity down the road. Stephanie, KKR, you recently sold this one. This one also down 3%.
You know, yeah, I mean, I made 10% in the name, so I like it very much long term, but I just prefer the banks because they are cheaper. This stock trades at 28 times forward estimates. It's just not cheap enough for me, and I made good money. And the whole reason I did it is because I expected capital markets to recover. Capital markets is recovering, except I think you're going to get better bang for your buck with the banks.
All right, and we talked about that already earlier in the show, so cover that ground. Stay with us because final trades are coming up on halftime. Before we get to the final trades, you want to give a quick shout out to Josh Brown and his firm for making this year's Barron's list of the top 100 RIA firms in the country. Nice job. Appreciate that. It's like a love fest here today, right? Everyone getting accolades. We are going to move on. Let Josh have a quick moment to have his day in the sun. What's your acceptance speech, Josh?
I just think the world of Barron's. I've been a subscriber since 1998, and I really appreciate all the work that my team did to get us onto this list. I know I'm the face of the firm, but I'm really just the hood ornament. The team is the Rolls Royce. So thanks to everybody and all the fans and clients. Really appreciate it, guys.
Great job, guys. Josh, go ahead and kick us off with your final trade.
Yes, I wanted to mention Electronic Arts. This was best stock in the market conversation we had the other day. It's set up. It's starting to move higher. I like it right here.
Quick, Jim, and then Steph.
Lockheed Martin is breaking out.
And Steph.
Capital One.
All right. Nice job, everyone. Thanks for joining us. That does it for halftime today.
That was Josh Brown and guests on the halftime report earlier today. It is Tuesday, September 16th. Market is closed. It's 5:10 p.m. as I'm recording this video here. What are we going to do? We're going to take a look at the stocks that they talked about on the show. In fact, there were more than the 26 stocks that we're going to cover here. But we're going to go through a good number of them. And we're going to take a look at the some of the index ETFs, and we'll look at some of the Mag 7 stocks like Meta, Tesla, Apple, Nvidia. And we also have a few requests from our members down below. So we're going to take a look at all those. So let's get started first. Really important to look at the markets and see how they perform today. Now, before we get into those, I just want to show you guys some of the headlines right now that are coming through as far as around 4:49 p.m. The last thing that popped up, stocks slip ahead of the Fed's rate decision. Fed is set to cut rates, but forecast for the rest of 2025 is key to markets with politics clouding the picture. Could your employer take away your 401k match? Stocks retreat ahead of Fed decision, seen as a done deal. Does that mean that the markets have been pricing in this cut? So that's another thing that we have to take into account. Trump extends the TikTok deadline despite hopes of imminent deal. Investors haven't been this bullish on stocks in months. All right, so that's not necessarily a good thing. But, all right, let's take a look, folks. We're going to look at, start off with, actually, let me go back. Sorry. We got to take a look at the home here. And let's zoom out a little bit. There we go. And here we go. So what we're looking at is the top 4 indices up here, and you can see that the Dow Jones dropped in the morning. It moved up slightly. It was down though for the day, 0.27%. NASDAQ was pretty flat. You can see it was only down 0.07. S&P 500 gapped up in the morning, but then dropped and then finally closed down only 0.13%. Russell 2000 was down the most, 0.45. So these aren't really big numbers. If we take a closer look at, the new highs versus new lows, it's still 69% of the stocks are experiencing new highs. 57% or so are above the SMA 50 or 50-day simple moving average, and about 55.9 are above the 200 moving average. So let's also take a look at the heat map. Let's see what that's showing us here. Well, NVIDIA was down. Okay, it was down 1.61%. So was Microsoft, down 1.23%. But Tesla up again, 2.82%. Amazon was up 1.13%. Meta was up 1.87%. Eli Lilly was up, 2.21%. The energy stocks did pretty well. Looks like the utilities and basic materials were in the red most of the day today. Financials did pretty okay. Let's take a look at the sectors. So we click on the groups here, and you can see that actually it was energy that was the top performer, up 1.29%, followed by consumer cyclical, and utilities and basic materials were at the bottom. All right, let's get into the stocks now. We're going to start off with the S&P 500. And as you can see, we're still in a very steady trend here on the weekly chart with the S&P 500, the SPY ETF. On the daily chart, same thing. We're looking for price to be above the candlesticks here to be above the Tenkan-sen, the 9 period, the Kijun-sen, the 26 period. These are all part of the Ichimoku indicator. We want price to be above the cloud itself, Senkou span A and Senkou span B. And we want the Chikou span, which is the closing price today, that's projected 26 periods into the past, to be above the candle 26 periods ago, which it is. All right. And when we have all of those elements in play, with the green line above the red line and the Senkou span A above the Senkou span B, everything that you see here, that tells us it's a very strong uptrend. And so you can even see it down here below with the directional movement index, right? We get that at a setting of 9. The ADX is moving up. That represents momentum. The green line is above the red line. That's showing us that the trend is up. All right, let's keep looking at, so let's take a look at some of the other ETFs, like the QQQ ETF, which is also showing the exact same thing here on the daily chart. All right, very bullish still, even though it was down 0.08%. The Dow DIA ETF was down 0.28%, but it's holding up above the Tenkan-sen and above that support level that you see right there. That's good. Russell 2000 also holding up above the 9 period, even though it's had this slight little pullback that you see right here. To me, that's looking like an opportunity, because if tomorrow the news are positive, we're going to see a pop up here, and it could potentially even drop, basically break above the 244.98 level. FEZ is the Eurostoxx 50 ETF, and this one has been stalling around the 61.50 level, but it's starting to show more and more strength. These last couple of weeks now, you can see that right there. On the daily chart, it looks pretty bullish, and on the weekly chart as well, right? But it's stalling at that 61.50. That's the thing, the price level I'd be watching closely. The VIX was up 4.27% today. Yesterday it was up, and I mentioned that was kind of unique that the stock market was moving up while the volatility was also increasing. And today you can see it did not increase. Prices did not go up as we're awaiting those that Fed meeting. So let's take a look next at. And remember, if we get a big spike here in the VIX tomorrow, that's not going to be a good thing for the markets. But I'll be watching it and share what I find out. All right, CNBC. These are the stocks, a lot of the stocks, not all of them, but about 26 that we're going to run through. What I did essentially is reviewed all of the stocks before making this video here, and I highlighted the ones that look the strongest with a little blue flag that you see right there. The ones in the bottom part are not as great. There's something off about the technicals using this indicator. And so I'm going to, basically explain to you what that problem is, why you may want to hold off, for example, on some of these other stocks and maybe focus on the ones at the top. Even though there's some of them that were down today, we're going to, as you'll see in a few moments, their technicals look really sound. So let's start off with APTV, Aptiv, which is an auto parts, consumer cyclical sector. Very strong uptrend on the daily chart. This one was actually up 0.39%. And if you look at the weekly chart, also very strong. It's above the cloud. The Senko Span A is above the Senko Span B. Chico Span is above price. The only negative that I'm seeing here is that price is coming closer and closer to that 200-day, which has been declining. And it might find resistance around that $90 level, which is another 8% away from where we currently are. So that's a weekly chart. Here's a daily chart. All right, next one is Citigroup. This one also looks really good. You can see it was up 0.85%. This particular stock has broken through this resistance level here that you see, and it's expanding to the upside now. And you can see it also right here with the positive DI above the negative DI, and the ADX is moving up. The last time that happened, you can see back over here, right, where the ADX started moving up and the green line was above the red line. If we go straight up, it expanded, right? It actually continued to expand, even though I closed out my position a little bit sooner than I probably should have. I only took a 10.2% profit. A lot of times I'll take profits in a specific stock, and then because I want to put that money to use in another stock. I see something that has more potential, you know. Anyway, let's keep going. The next one on the list is going to be Capital One Financial. Also has a blue flag here. Reason is price is still above the Tenkan-sen, above the Kijun-sen, above the Ichimoku Cloud. Even though it dropped 0.94%, still looks pretty healthy on the daily and both on the daily and weekly. Johnson & Johnson is another stock that well, this is a weekly chart. You can see it's pulled back a little bit, down 0.53%, but still holding up above the cloud itself. Here's a daily chart. You can see that basically it's building a little bit of an ascending type. Maybe not as, no, I take that back, a symmetrical triangle. So if we take that high there, we draw that trend line there, we draw another trend line right there. That's an ascending, I'm sorry, I keep calling it ascending, symmetrical triangle. And that basically, we don't really know what's going to happen here. This could either pop to the upside, which is more likely since we are above the cloud right now. And so the sentiment is still very bullish for this stock. We haven't taken out any lows, for example. So it's a higher probability it's going to go to the, it's basically going to break out to the top. But it could just as easily break to the bottom part, and that's why we need to wait it out, in my opinion. I got out when it got under the Tenkan-sen here, and it's been going sideways ever since. But right now, I do like it still. Why? Because as you can see, it's holding up above the Tenkan-sen. I'm sorry, it's holding up above the Kijun-sen. It's very, very close here to the Tenkan-sen. And if we look at the weekly chart, all the elements of the Ichimoku are still very bullish. LYV, okay, you can see that's moved up a little bit. Here's a daily chart. You can see that that pulled back. That's Live Nation Entertainment. It gave us a nice little move here because it came under. It pierced the 9 period, the green line, and then the buyer stepped in and pushed it up. And you can see that on the 5-minute chart here where the price dropped. And then for the rest of the day, it's, the buyers just kept on pushing the price higher, creating this little up channel that you see right there. We'll see if that can continue. Then you got MS, which is Morgan Stanley. This one's kind of pulling back a little bit, but it's, I guess you could call it more of a building of base right there. Once it breaks either to the upside, then I think it's going to expand some more. So I think, yeah, it's just, the news. That's what we're waiting for, to see what happens tomorrow, and then we'll see how all of these stocks do. It was down 0.53%, but overall I like it on both the daily and the weekly chart. Very bullish. And I've checked on all of these that are have a blue flag. I've checked the weekly charts. They all look good. Here's Rocket Companies. Josh Brown liked this one back on September 11th. He also talked about it a little bit today. It's still looking pretty bullish as far as holding up above, again, the moving averages, right? But as you can see, we've got a couple of signs of weakness here. That shooting star, that is not a good candle. That's usually a reversal candle. And so you can see it has pulled back slightly. What does a weekly chart look like? You can see it's a spinning top that's kind of developing here. It's only Tuesday still, so we really can't put too much emphasis on the candlestick today, because it's only Tuesday. This candlestick will actually form completely on Friday in the afternoon. You'll have a better assessment of what's really happening here. Financials, XLF, also just kind of, moving sideways. Nothing major happening here in the financial sector. You can see that with the XLF ETF. What about XRT? But it's holding up, right? So that's the key thing. XRT, today they talked about retail ETF XRT. That one also has been moving actually nice and steadily up. As you can see, it's an up channel right now. I like XRT. And here's the weekly chart. Okay, we broke through this level over here back in, that goes all the way back to 2024, December. And now we're basically above, we're hitting all-time highs. Oh, no, I take that back. We're not hitting all-time highs with XRT. That would be around the 105 level, but we are breaking these prior highs. Okay, so that where is it most likely going to find resistance once again? Looking at this weekly chart, in fact, let me switch it to a monthly. You can see right here, let me just switch it through this horizontal line there. Find out what the high there is, 104.31. We got that there. We'll color this purple to represent the monthly level. So that's the target, 104.31. How far is it? 16.3% away. All right, so I like XRT. Looks good in the monthly, the weekly, and the daily chart. All right, now the rest of these stocks. Okay, they don't have the blue flag, and we're going to explain why. We won't spend too much time on them. We really don't need to because they're, they're weaker than the other ETFs and stocks I just talked about. Look at Adobe. It's been in this downward channel now for a very long time. For those of you who wonder, why don't I just buy a stock and hold on to it forever? I think someone made a comment about, Google, for example, because, Google had a little pullback and, there's such a thing as market timing that is actually real. And if we look at this on a weekly channel here, you can see that from the highs up here, this stock has dropped 44.78%. And generally speaking, if it's like especially on a weekly chart, if it's under the Ichimoku cloud for too long and it takes out some lows, just from like this point right here, you can see it dropped another 25%. That's because the trend is to the downside, and it's a stock that's no longer of interest, right? A lot of the demand for buying the stock is out. It's just not there. That's what's pushing the price lower and lower and lower. At some point, what will happen is it will get pretty cheap, too cheap. The price of sales is still at 7.86, so that's not super cheap yet. And the buyers will step in, and you'll see it happening, and you'll see the change in the inflection here. There will be an inflection point, right? Maybe we'll take out a high, for example, a prior high. That would be the first thing that needs to happen. Who knows? Maybe this is the double bottom. This could potentially be a double bottom. And then we take out this high here, and then it starts to break through the cloud, and then it will. But guess what? That's not happening right now. So what would I do? I'd hold off. You can see that trend line right there. It's still dropping, right? In fact, it's accelerating to the downside. Okay, so you can see here this angle here versus this angle. All right, see that acceleration to the downside? Not good. Not good. And if we take out this low here soon, which is possible, then expect it to create another leg to the downside. So Adobe, I don't like, and you can't convince me otherwise. By the way, all right. What about AstraZeneca? Don't like this one either right now. Why? Because it's pulling back here on the weekly chart. You can see. At least not for the time being, right? It's pulling back. In fact, it actually broke through this little, you can see that little consolidation right there. It was building a base, and instead of breaking to the upside, it broke to the downside. So that's showing weakness. The ADX also started to go sideways. Here it was moving up as price was moving up. Now it's going sideways. The negative DI is moving up. That's not good. And the positive DI is moving down. If they merge, okay, then it could begin a new downtrend potentially, like it did over here. Do you see this merging right here? If we go straight up, let's use this arrow here, and I'll show you what happened. You go straight up to that. It happened on that candle right there. Okay, it was still above Tengensen. It led to a decline. How big of a decline? It led to a 24% decline in 2.5 months. So this is why I use technical analysis to get a more optimal entry and hopefully a more optimal exit. You're never going to get it perfect. Okay, there's no such thing as perfection. I mean, I'll be honest. Actually, there have been a few times where I've surprised myself when I've gotten out at just the right time, And a lot of those times it happens because of my analysis of the candlestick itself, right? So and where it is positioned on the chart. And then I'm like, wow, okay, that was a really good call. Anyway, let's keep going here. CMG, here's another one that I don't like. Okay, this one's also in a downward channel, and it got even weaker. It got weaker here. You can see it got under that trend line right there. So that's not good. Delta Airlines is kind of pulling down a little bit here, but finding support still above the Tenkan and Kijun on the weekly. But what about the daily chart? It's underneath the moving averages here. So I'd want to hold off a little bit. It doesn't look as weak as some of those other ones. What about Deck Outdoors? Now this one here on the daily chart, it's under the Tenkan. So I'd hold off on that one for the time being. What about DHI? That one also is under the Tenkan, but it could easily just bounce here if it gets above the 9 period here. I think it's going to show some strength. What does it look like on the weekly though? It's kind of pulling back a little bit after the spinning top. So I don't know if, you got to look at those higher time frames and see where it is in relation to this move up. You can see that these last couple of weeks have not been showing a lot of strength. This is weakness right here. The momentum is starting to decline or go sideways. And you can see that when I zoom in here, you can see that how the positive DI crossed right there. Price started moving up. Now, and the ADX was moving up. That represents momentum. Now that the momentum is going sideways, it's more than likely to continue to drop. Hard to tell, of course, but that's what I'm seeing on the charts. EA, this was Josh Brown's final trade. So on the weekly chart, it doesn't look bad at all. I mean, you can see that the future cloud is bullish. Remember, the single span A and single span B, they project 26 periods into the future. And when the single span A is above the single span B, that's very bullish. But it is kind of like, just kind of petering out right here, just moving sideways. As you can see, the closing prices have been stuck in this little range here. So I'd like to see a little bit more strength here. Maybe we'll see that tomorrow. That's the weekly chart. This is the daily chart. Tenkan is under the Kijun. That's not a good sign. But if you look at the directional movement index, that does look more bullish. So we're getting mixed signals. And so for that reason, I wouldn't be interested in taking a trade in this one right now. Here's Gap. This one's inside the cloud, bowling over. You can see how it found a lot of resistance at the top of the cloud, and now it's pulling back down. It's going to probably find some support at the 200-day. That's the dotted yellow line there. But so I would stay out of that one. INVH, obviously in a downtrend. And if you can pick the bottoms, that's fantastic. I personally, the only way that you can, in my opinion, that you can determine that the bottom is in is when you finally take out the prior high. And that's what's necessary, in my opinion. All right, let's go to the next one, ITB. This is the U.S. Home Constructions Index Fund, ETF. The reason this one didn't get a check mark is because it pulled back under the Tenkan, but as you can see, it's in a very strong uptrend. Now, let me just check something. You see this trend? I'm going to build a trend line right here based on those lows. Okay, see how it is holding up above those levels, so that's good. It's above the 200. What I don't like is this merging that's happening here between the red line and the green line. You can see that right there too. So this, if we get one more bad day, it's breaking through the Kijun, the 26 period, and that could break this low and everything can start falling apart. So that's why I'd be a little bit concerned. Here's a weekly chart. Again, if it's already inside the cloud right now on the weekly, it looks like. That's why it doesn't have a blue flag. I'd hold off on that one too. KBE looks okay on the weekly, even though it does, today it was down. This is the weekly chart. Here's the daily chart, pulling back. And there's the crossover, the negative crossover, and the volume increasing. I also don't like to see that. See right what's going on here? The volume bars, these represent the number of trades happening each day. So if we go back to that candle right there, not so much. And then the very next day, more selling pressure. Even more selling pressure, but then stalling at the 26 period. So I'd hold off on that one. KKR, also hold off on that one, even though it is above the moving averages, but it's inside the cloud. So no. LMT is Lockheed Martin. This one looks pretty bullish on the daily chart. I do like what I'm seeing on the daily. It even took out, it did not take out this high here. So let me draw a trend line for you guys, so you can see what I'm talking about. right there. The high of 474, 474.40, 474.40. And what's the high here? 473, 474.76. I think that's the high that we want to look for. There it is. Okay. So that is the level that needs to be broken. And we're not there yet. We're at 474.32. We're under it, barely. And you can see that shooting star type candle forming. Does that mean that this is the end of Lockheed Martin? No. But I just don't. It looks good in the daily. Let's take a look at the weekly, because this thing has been in a decline for a while. I bet you it's not looking that great on the weekly. Oh, yeah, I was correct. So it's still under the cloud on the weekly chart. Ideally, what you want to look for is, both of these time frames here, the daily and the weekly chart, to be, you want price to be above the cloud always. In this scenario, I would not be touching this one. All right, let's keep going. We got QXO. Look at this one on the weekly chart. Inside the cloud. Here it is on the daily chart. It just doesn't look too pretty to me. It's been moving sideways here. It's under the 9 period. And like I said, on the weekly chart, it doesn't look good either. Target. I mean, this has been a loser for a while now. Another example of where technical analysis can help you stay out of specific stocks that you might think are really strong stocks. Take a look at the highs here. This was $268. Do you see these two peaks right here? That's called a double top pattern. All right, I'm talking about this high and this high. All right, and this is what the double top pattern looks like right here. Let me pop it up here for you. There we go. Double top. Price comes up to this level, drops, comes back to that same level, is unable to break through that prior level and drops. Then it takes out the prior low. Okay, that is bearish. That's what happened here. So you can see that it came back to that level here, dropped, and it took out this low. Once that happened, the whole trend was broken. Okay, it dropped some more. It tried to recover, was unable to successfully get back to this level, and created a lower high. Then we had another lower high and another lower low. It stayed in this range for a little bit. You can see that right there, right? And it's still under that range. Took out these lows here, okay? We even created another low down here. Why would you want to jump into this here? How do you know this thing is going to turn around? I mean, right here. You don't. And so wait for that. Wait for that evidence. Use a logical approach. Or use reason. Use technicals. Okay? Believe what you see with your eyes, not what you hear on TV. All right? Here's Toll Brothers. T-O-L-L. I'm sorry. T-O-L is the ticker symbol. Why did this not get a blue flag? Well, on the weekly chart, yes, it's above the cloud, but if you look closer, one of the elements is negative here. The single span A is under the single span B. All right. And then if we look at the daily chart, it's currently under the Tenkan-sen. So, that needs to be corrected. Vertex is the next one we're going to look at. This one's also in a downtrend. Since that high of $519, it's dropped down to $391. That's a 24.5% drop. Also, not something I would be touching right now. In fact, it looks like it might decline some more. If we zoom in on this directional movement index, check this out. See how like the ADX was dropping? That means the momentum was decreasing and it was going sideways. That's generally what you'll notice when the ADX is just dropping. And now it's taking a little spike to the upside. Ooh, that's interesting. And the negative DI is also moving straight up, and the positive DI is moving down. This is not good. Not good. In fact, if we look at the volume, see how the volume is also increasing? This is what I'm talking about. I know it's kind of like a little bit maybe over analysis here, but this is what's necessary so that you can get a better sense of what to be doing here. And certainly I would not be adding a position in this stock. All right. Let's keep going. At least not right now. Mag 7 stocks. Meta today was up 1.87%. It got a blue flag today, finally. Why did it get that? Because the Tenkan-sen crossed above the Kijun-sen here. Chiku span got above price. See that right there? And the cloud itself is still bullish on the daily, and on the weekly chart, same thing. It's looking good. Now, it does have resistance here at 796.25. And that is pretty close. It's not that far away. It's about 2% away. So, once it breaks that level, we'll be experiencing all-time highs with Meta. But again, here's the complete opposite of what we just saw a second ago. This is where you see the volume increasing. See those positive green bars. You see the ADX, the momentum is increasing to the upside, while the green line is above the red line. This is what you want to see right here. And price is increasing, moving up. So it's got more potential to the upside tomorrow. All right, let's keep going. Tesla was up 2.82%. You can see it's a little bit extended up in these areas, up at this level here. So it did not take out yesterday's high. All right, so yesterday's high is right there. You can see that it actually, this was where price basically closed. It moved up, it gapped up a little bit, moved up, but was unable to take out the opening price and the high of the prior candle. Therefore, it's not ultra bullish in my opinion. Apple, okay, we've got that little shooting star here. It was up 0.61%. It actually does look pretty good on the daily. I'm not a big fan of this candlestick though. And plus it's got that resistance right there of 241.50. So I wouldn't be, jumping into this. If you look at the weekly chart, we still have a bearish cloud. The bearish cloud is when you've got the light colored blue line under the purple one. That's a single span. A is under single span B. So that's not good. But it looks like it could easily cross over by the end of this week. Maybe. We'll see. Hasn't happened yet though. Here's Nvidia. Okay, stalling at the Tengen-sen on the weekly chart, and on the daily chart, it's holding up above the moving averages in the cloud. So I'm still out of this one. Okay, still not jumping into this quite yet. And then we've got a couple of a couple of stocks from our members that they've requested that I analyze. I mean, check out this one, folks. SanDisk Corporation. And here's a perfect example of how price can really start to take off once, and only once, price is above the cloud. So you can see from that point right there where it got above the Ichimoku cloud and above the moving averages, it moved up 95%. And this is a daily chart. This is a daily chart, which means that it happened within 25 days. It doubled in price almost. So that's pretty wild. A lot of volume, a lot of interest still as this price continues to move up, but it is extended. And when it does finally, and this type of angle kind of is a little bit scary because it's not a 45 degree. You can see it's going almost straight up. When this thing does finally correct a little bit or gets under a prior low, and that's what I'd be watching. As price has been moving up, I want you guys to pay attention to something that you'll notice. Here, when it broke this level, okay, it moved up. Okay, never took out that low or that low or that one or that one or that one, right? As it just kept on stair-stepping its way up. If it takes out a low and drops under, that's when you should start worrying and maybe consider taking your profits, especially if you're in the money by a lot, if you got into this at the right time. Here's a weekly chart. Look at those 3 weeks. Okay, this is a stock that became public on February 14th. It moved up about, it's a very volatile stock. It moved up about 50% in 1.2 months, and then it dropped from that high to this low, 51.4% in 14 days, so in 2 weeks. And since this low down here, it's moved up 224%. Very volatile. Probably a great stock to consider day trading if you have the time to day trade. Here's a 1 minute chart. You can trade this on a 5 minute. Here, for example, you start looking. You use the same rules that you would use on the daily and weekly charts to determine whether you should be buying a stock. All right, and then try to take profits from that. But right now, it actually does seem to be stalling a little bit here. You can see that it didn't really move much. Didn't close above the high of the candle. Right, so that's not ultra bullish, to be honest with you. You can see how that. Let me just draw a little trend line. Do you see that high right there of the high of 92.06? All right, it closed at 91.55. It did not break and close above, broke above it, but never closed above it. So that's what I'd be watching. How about AppLovin? Here's another great stock that's been taking off since it broke that 525.15 level that I mentioned a while back, and that needed to be taken out. In fact, not only did it take it out, it actually gapped above it. All right, it didn't even give it an opportunity. It just said, you know what, it was at this level, and it gapped right above that level, recognizing that that was going to be an area that needed to be broken. And then since then, it's been taking off, right? So from the time that it broke above the Tengensen and Kijinsen here, it's moved up about 34.8%. And how many days has that been? 25 days, it looks like. Okay. Very interesting for AppLovin. I like it. It looks good. Here's the weekly chart. Nothing negative to say about AppLovin. You can see 2 weeks in a row above the 525.15, hitting all-time highs. The directional movement index looks good. On the daily chart, it looks good. Volume is even increasing here. I like this stock. If I was going to pick between the two, I'd probably pick this one because I like the, it's not moving straight up, okay, which is a little bit more scary, like the SanDisk. See that angle? That's a little bit more scary for me. I like a stock that's kind of moving, progressively up, like almost like a 45-degree angle. All right, guys, that is going to do it. You know what I forgot to mention? Something very important. Let me show you how to become a member. And why would you want to become a member? And by the way, there's a few things that you can do to support this channel, right? So if you like what you're hearing here today and you're learning a few things and you want to help support the channel, one free way to do that is by hitting the subscribe button, which takes 5 seconds. All right. If you're, on your computer, you'll see a little subscribe button in the bottom right-hand corner, all right, of your laptop. But if you're on a TV watching this, you probably won't see that. So, but you can hit the join button. I'm sorry, you can hit the subscribe button and the notification bell. Okay, that, and then maybe share this with someone. But if you want even more content than what I produce here, you can access these member-only videos. All right, and I do one every week where I go over my entire portfolio. I share up to 20 new stocks, new stock ideas and today I added one more stock from that 20 stock watch list from the weekend to my portfolio. I closed out of another position. You can find out all about that by becoming a member. And to do that, you click on the join button here. This pops up here, the membership tab, and you'll see 3 different options. One way to support the channel is by becoming a Blue Cloud supporter, and you can request a stock to be analyzed on the show, okay? Like I just did. Blue Cloud Trader, and all you need to do is just basically post a comment in the members, you can post a comment in the comment section once you become a Blue Cloud supporter. Blue Cloud Trader, you can do the same thing. Okay, you can request 2 stocks be analyzed, and then you'll have access to those member-only videos that I just mentioned. Okay, Blue Cloud Legend is the top tier. This is when basically you can request up to 3 stocks. Day trading videos that you won't find here that I've pre-recorded, so you can see those. And then I also share daily trade updates, which I post. It used to be under the community tab. Now it's under membership. So once you click on this and become a member, a new little tab will pop up here. It will look like this. You'll see membership, and that's where you'll find the daily trades. And I usually post those before the market closes so that you have the opportunity to review those stocks. And guys, guess what? Like I said, I want to thank you guys for supporting the channel. I got to go. Have a good rest of the evening, and I'll catch you all in the next video.